Welcome everyone. In this presentation, we're going to explore how to spot manipulation in balance sheets, particularly when it's related to money laundering. We'll break down the key areas to focus on using easy-to-understand examples.
Money laundering is when someone takes illegally earned money and makes it look legitimate. For example, imagine someone earns money from illegal activities like drug dealing. They can clean this money by running it through a business like a fake restaurant and reporting it as income from selling meals. Detecting this is critical because it can damage businesses and the economy.
There are several red flags in a balance sheet that might indicate manipulation. For example, imagine you're checking a bakery's financials and you see they suddenly claim they sold 5 times more cakes than last year, but there's no evidence to back that up. That's a potential red flag.
One way launderers manipulate the balance sheet is by inflating assets. For instance, if a company lists equipment worth 50 Indian rupees lakhs when it's actually worth 10 Indian rupees lakhs, they might be trying to hide illegal money. Another example is overstating inventory, like a car dealership claiming they have more cars in stock than they really do, to balance their books.
Look out for companies with unusually large amounts of cash or frequent large deposits and withdrawals. For example, if a small bakery claims to have 2 Indian rupees crores in cash sitting in the bank without explaining how they earned it, that's suspicious. Also, if huge amounts of money move in and out of their account quickly, it might indicate laundering.
Another warning sign is inconsistent liabilities. For example, if a company has a loan with no interest payments, or they owe money to a related company but don't report it properly, they could be hiding illegal transactions. In another case, a company might owe a large sum of money but fail to include it on their balance sheet to make their finances look healthier than they really are.
Here, we're comparing figures between the income statement and the balance sheet. Imagine a company reports a huge spike in profits, but their receivables, money they're supposed to collect, haven't increased at all. That's a mismatch. For example, if a retail store says they made 1 Indian rupee crore last year, but their customers haven't paid them, something's not adding up.
Unusual transactions, like constant transfers to related companies or individuals, are suspicious. An example would be a construction firm repeatedly paying large sums to a shell company owned by its CEO's friend. These transactions might not make sense from a business perspective, and could be used to launder money.
Rapid growth or sudden large capital infusions can also be red flags. Imagine a small company that's barely getting by, and then, out of nowhere, they receive 10 Indian rupees crores from an unknown investor. That could be laundered money being injected into the business.
Offshore entities and shell companies are often used in laundering schemes. For example, if a local grocery store suddenly opens a subsidiary in a tax haven like the Cayman Islands, this might be an attempt to move money around without paying taxes or to hide illegal profits.
Other tactics include using barter transactions or real estate to launder money. For instance, a restaurant might trade food for an expensive car, but report the trade as a normal business transaction. Or they might buy property at an inflated price to hide illegal money in the form of assets.
If you spot any red flags, it's important to investigate further. Start by cross-checking the balance sheet with the income statement and cash flow statement. Make sure that what a company claims matches up across all reports. For example, if a company's profits look high but their cash flow is negative, something may be wrong.
To wrap up, balance sheet manipulation for money laundering purposes can be tricky to detect, but by looking for these red flags, we can better identify potential problems. The key is to stay vigilant and always question numbers that don't add up.